What is going on, traders? Welcome back to the Traveling Trader. In this video, we will be talking about the best stocks to buy now for February 2021. Yes, this month right here. Now, when we do these things, we obviously try to trade with the current market conditions. I'm going to have something in every sector that I think is going to be big for 2021. So we're talking about gambling, cannabis, etc., as well as a few SPACs mixed in there. I will also be doing a separate dedicated video for the best penny stocks to buy for February 2021. I'll probably release that tomorrow or the day after, so be on the lookout for that. And always keep in mind, these aren't the only stocks, right? I always get messages from people saying, what about this or what about that? Guys, I have to keep the limit condensed. I have to keep it at a certain limit because I can't talk about every single stock. So yes, if you do have some suggestions, then please be sure and leave it in the comment section below. I love to hear from you guys, but I simply cannot cover every single stock. And before I get into it, if you get anything out of this video, leave it a big fat thumbs up, just like this. Leave it in the comment section below. Let me know if you're playing any of these stocks and what suggestions you have that might not be on my list. And without further ado, let's get right into it. So I'm going to get the blue chips out of the way first, because those are, I guess, the boring stocks, or the ones that are obvious. But I talked about how there could be a potential market correction coming up. I don't think we'll see a major crash, but there could be a potential market correction coming up due to the fact that after this week, there aren't really any more major catalysts up until the next quarter, unless we get some sort of stimulus in between. However, there are a few blue chips that are beaten down that I think are at major moving averages, and I think are at good opportunities, right? Obviously, you don't want to buy Tesla at 900. You don't want to buy Apple near the all-time highs, but there are a few blue chips that I think are really positioned well at the moment. So the first one is Facebook. Now, we bought calls on Facebook as we retested the 200 MA. This was a great opportunity last time, about a couple weeks ago. We're back there now. Anytime I can get a blue chip at a major discount at the 200 MA, I'm going to do it. If you look at Facebook's earnings, I mean, they just crushed earnings. Almost $4 of earnings per share. They are by far and away the largest advertiser in the world, and they are definitely a cash cow. And if we get back to near all-time highs, which was above $300, there's still about 14% more upside left. But anytime I can grab Facebook on the dip, I will. Stock number 2 in the blue chip section is AMD. AMD, again, sitting at the 100-day moving averages. And I don't really have to go into the fundamentals of these blue chips, because you guys are familiar with these companies. Some of the other companies that are less known, I will go into some of the fundamentals. But AMD sitting at the 100-day moving average, definitely a buy anytime I see AMD at a major moving average, or any one of the large semiconductor companies. And lastly, CRM. CRM, again, was at the 200-day moving average, just another profitable company with massive cash. They just bought Slack. Their all-time high is sitting somewhere at around $283. And I think CRM is a good buy anytime there is a major retracement like this. Now, I'll talk about Tesla real quick, because I always get questions on that. If you saw my last video, I was saying that Tesla fell below $800 due to the market dip, and that if you were willing to buy Tesla at 900, you should be willing to buy it at 700 something. And now it is back up to 870 something. Here's the thing about Tesla. Yes, it is high right now, and I generally don't like to buy at the high. And my cost basis on Tesla is around $82 at the moment. So it's very hard for me to buy at around the $870 level. However, they just got an upgrade from Piper Sandler. And one thing to note is that Tesla has never not hit, sorry for the double negative, but Tesla has never not hit a target, especially a target by Piper Sandler. And I do think that they can get to the $1,200 range by end of year, especially if they do inch closer to that million car delivery mark. So while I personally cringe at buying Tesla at 870, I do think again that it will hit that price target by end of year. So do what you will with that information. It doesn't mean that we won't see a retracement. Like if you bought at 870 and it goes back down to 750, you should be expecting retracements of the sort along the way. But like I said, by end of 2021, I do think we will hit that price target. All right, now that we got the blue chips out of the way, let's move on to the cannabis sector. So the first one I'm going to talk about is Sundial Growers. Yes, this is a penny stock and will likely be on my best penny stocks to buy list for February 2021. I've talked about this before. We already made a killing off of Sundial a couple of times, and Sundial's volume is what is impressive. If you look at FinViz or any stock screener, you will see Sundial at the top of the list for any penny stock. So let us take a look at Sundial's chart real quick. If we take a look at Sundial's chart, you'll see that Sundial moves in ways where we have these spikes followed by these periods of consolidation. And now we are making higher highs, which is a great sign. Sundial also had a stock offering last week, which was one of the reasons for the price dips, but it is currently sitting at around $1.03. Now, the one thing I like about Sundial is that its revenue is growing year over year. It is obviously finding it hard to be profitable, as a lot of these small-time cannabis companies are. And this has a lot to do with legalization as well. Once legalization kicks off in the US, and I think that it'll be back on the table in 2021, and obviously there is a blue wave, meaning that Democrats control all houses of the government, that legalization, federal legalization, will be a lot easier. And then you will start seeing these companies like Sundial, CGC, Afria, etc., you will start seeing astronomical growth in those companies because they won't be bound by legal parameters. All right, stock number 2 on the cannabis list is Cronos. Now, from a fundamental perspective, from a technical perspective, I really like Cronos here. And the reason is because it is forming this big bowl shape, which in technical terms is called an accumulation pattern. And this is where the traders and investors are happy accumulating this stock as it finds support, and now are riding it back up to where it started this huge dip from, which was over the $24 mark. It currently sits at around $11. Now, here is why I also like Cronos from a fundamental perspective. If we take a look at its financials, you'll see that Cronos recently achieved profitability. And if you look at its net income margin, it is 270% compared to the sector median, which is in the negatives of 2.77%. Let's take a look at its income statement, and you'll see that it actually did post a net income last year as opposed to the previous years where it was losing money. We posted a healthy net income on Cronos. So it just became a profitable company. Its growth is extremely healthy. And then plus on the technical side, there is this huge accumulation pattern here. So I do like it for long term heading into or rounding out the year of 2021, especially if we do get federal legalization. I can easily see it back above $20, which would represent a double from where the stock currently sits. All right, so we talked about blue chips, we talked about cannabis. Now it's time that we talk about gambling. And the stock that I have on this list is Gnog, Golden Nugget Online Gaming. That's no surprise. I've talked about them before. But if we take a look at their chart, you'll see that it currently retested the 100-day moving average. And we actually sold puts on Gnog as it retested the 100-day moving average. And by the way, if you want access to all of our alerts, link is in the description below where I send out all of these plays. CCIV had a monster day today, hitting almost $40 as the rumors that it will merge with Lucid continue to grow. And people are just awaiting that announcement. Now, obviously, it'll be a major dud if it doesn't. But anyway, sign up if you want access to our trade alerts. Back to Gnog. So here, as I said, it sits at the 100-day moving average below $20. Happy to buy this. Again, just like cannabis, gambling is one of those things that is also on the table for legalization. Gnog is a profitable company already. You see the RSI curling up. The stochastic RSI is oversold. The MACD is curling up as well. So I even like it from a technical perspective. Happy to pick it up under $20. All right, now let's move on to energy, minerals, and materials. So the first stock on this list is Exxon Mobil. Yes, I know that is a surprise, but let's actually take a look at it from a technical and fundamental perspective. So Exxon Mobil is currently sitting at the 21 EMA, has this really healthy uptrend here after a double bottom bounce from a low of around $30. An extremely cash healthy company at $17 billion compared to a sector median of $327 million. That represents a 5,000% difference. And they're planning on a dividend increase within the next year, which shows you what they are projecting their company to do within the next year. They wouldn't say this publicly if they didn't think that their company would be back on track, especially after the pandemic. And now that the fact that the oil prices are rising back to what they used to be pre-pandemic, they're also working with fuel cell to limit CO2 emissions. So they do have a deal with fuel cell as well. Not quite getting into the clean energy space, but better than nothing. However, I'm still very bullish on the stock as it was trading in the 70s pre-pandemic. So a really good recovery play as well. Next stock on the list is MP Materials Corporation. I've talked about them before. I'm sure you guys know a lot about them as well. Currently sitting at the 50-day moving average, in oversold stochastic RSI. You could see the RSI curling up, the MACD also getting ready to cross. I really like MP at a $30 range. Retesting the 50-day moving average, I think this stock will be a monster in 2021. And lastly, we'll talk about ABML, which is American Battery Metals Corporation. I've talked about them before in a previous penny stock video. We bought this when it was $1 something. It's currently trading at $4. This is just a beast of a stock that I think will continue to rise as the demand for EV and the recycling of batteries, of EV batteries, rise as well, along with the rising demand in electric vehicles. But a lot of people think ABML is just a battery recycling company. It is much more than that. If you take a look at its mission statement here, it says the company is focused on creating a vertically integrated lithium company in 3 ways: environmentally sustainable exploration and mining, green extraction processes, and the last one that they list is battery metals recycling. So they think of themselves as a lithium company. Very similar to another penny stock that I talked about in a penny stock video, which doubled for us, is NMGRF. This is a company that deals with graphite, but they are also focused on environmentally sustainable mining of graphite. Okay, so we did blue chips, we did cannabis, we did gambling, we did energy. Now, the next on our list is actually a healthcare company, or I guess like a healthcare lifestyle company, but it's HIMS, H-I-M-S. Now, if I was to classify any one of these stocks on this list as a hyper growth company, it would be this one. I think that 2021 will be a major year for HIMS. Now, HIMS broke out after the SPAC merger was announced, and then we saw the typical decline that we see with the SPACs, bounce off of the 50-day moving average, currently trading at around $20. But let us take a look at some of its fundamentals. And if you guys aren't familiar with HIMS, it's really called Hims and Hers Health, but it is a company that is focused on manufacturing wellness products for both women and men. Things such as hair loss prevention, skincare products, stress relief, sexual wellness, etc. Some of the fundamental numbers here, it says since 2018, HIMS has seen a 128% compounding annual growth rate of revenue with a gross margin of 71%, giving the company some of the strongest economics in the sector. Currently, the company has over 250,000 customer subscriptions, representing 91% recurring revenue. And not only that, but of course, our baby mama, Kathy Wood, also disclosed her stake in the company, and that is actually when the company took off. So with all of that said, I'm very bullish on HIMS. Again, the ticker symbol is HIMS. And I'll give you a freebie. Look up FST, which is a SPAC. I will also be doing a top SPACs video, I think, because I get a lot of requests for that. But look up FST, which is the company that's going to be taking Fertitta Holdings public. Fertitta is Tillman Fertitta's company, and he owns a lot of casinos, gaming companies, etc. So it's going to be taking that conglomerate company public, and it currently sits at just over $11. As you know, most SPACs are priced at $10, so still cheap, and there's still a great opportunity to get in early. Anyway, traders, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which one of these stocks you are holding. And if there's any stocks that I don't have on my list that you guys are bullish about, also leave it in the comment section below. Sign up if you want access to our trade alerts. Link is in the description. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.